Welcome to Key Tech. Please describe this channel if you are interested in today's video. In recent years, the global semiconductor industry has undergone unprecedented changes. As one of the world's largest chip markets, China's demand changes have had a profound impact on international chip equipment manufacturers. Recently, the financial reports released by many chip equipment manufacturers in the United States, Japan, and Europe have revealed a remarkable trend. The purchase volume of Chinese chip manufacturers has declined significantly. This change not only affects the business performance of these equipment manufacturers, but also indicates that the entire semiconductor industry chain is about to usher in a new pattern adjustment. Foreign media have also said the turning point of lithography machines is coming. ASML's lithography machine sales have declined. The turning point of the Chinese market has come. As the world's leading lithography machine supplier, ASML, advanced microelectronics company, S performance has always been an industry vein. The fourth quarter financial report of 2024 shows that revenue from mainland China accounts for only 27% of its total lithography machine sales, a significant drop from 49% to 47% in previous quarters. This change marks a clear turning point in the demand for ASML lithography machines by Chinese chip manufacturers. ASML has long relied on the high growth of the Chinese market, and now the reversal of this trend undoubtedly poses a challenge to its future strategy. ASML's performance decline is not an isolated case. It reflects the common problems faced by the entire semiconductor manufacturing equipment market. As an important force that once drove the growth of the global chip equipment market, China's reduced procurement volume directly affects the revenue structure and market layout of equipment manufacturers. ASML needs to find new growth points to fill the gap in the Chinese market, which undoubtedly increases the pressure of its market competition. Tokyo Electron's data, China's market contribution rate has declined. Similar to ASML, Tokyo Electron, a major Japanese chip equipment manufacturer, has also encountered challenges from the Chinese market. According to the 2024 financial report data, the revenue contribution from mainland China has dropped to about 30%, far lower than the level of more than 40% in the previous 3 quarters, and even close to 50% at its highest. This change shows that Chinese chip manufacturers are reducing their purchases from Tokyo Electron, reflecting that China's semiconductor industry's efforts to be self-sufficient in equipment have begun to bear fruit. Tokyo Electron's performance changes not only reflect changes in demand in the Chinese market, but also reveal the profound adjustments taking place in the global semiconductor supply chain. As Sino-US technological competition intensifies, China's semiconductor industry is accelerating the promotion of domestic substitution and reducing external dependence, which poses new challenges to international chip equipment manufacturers that rely on the Chinese market. The general dilemma of chip equipment manufacturers in the United States, Japan, and Europe. In addition to ASML and Tokyo Electron, chip equipment manufacturers such as Applied Materials, KLA Tencor, and Lam Research in the United States are also facing the problem of declining orders from the Chinese market. Data shows that in the first 3 quarters of 2024, China is still the world's largest buyer of chip equipment, accounting for about 44% of the global market share. However, in the fourth quarter, this proportion dropped sharply to about 25%, indicating a major adjustment in the procurement strategy of Chinese chip manufacturers. These equipment manufacturers generally expect that the proportion of orders in the Chinese market will further decline to more than 20% in 2025, which is undoubtedly a severe challenge for companies that rely on the Chinese market for growth. For a long time, the rapid growth of the Chinese market has been one of the key factors driving the expansion of the global chip equipment market. Now the reversal of this trend has forced these manufacturers to reevaluate their market strategies and business layout. China's efforts and challenges to achieve chip self-sufficiency. The reduction in procurement by Chinese chip manufacturers is a direct reflection of the accelerated promotion of the domestic substitution strategy by China's semiconductor industry. Faced with the uncertainty of the external environment, Chinese companies have increased their investment and support for the semiconductor industry, aiming to increase chip self-sufficiency and reduce dependence on external supply chains. This strategy not only promotes the improvement of domestic chip design, manufacturing, packaging and testing capabilities, but also drives the development of related equipment and materials industries. However, achieving chip self-sufficiency is not easy. The semiconductor industry is a highly complex and capital-intensive industry that requires long-term technology accumulation and R&D investment. In the process of promoting domestic substitution, China faces multiple challenges such as technical bottlenecks, talent shortages, and international supply chain restrictions. Despite this, China's semiconductor industry is still making breakthroughs and gradually building an independent and controllable industrial chain system. Future prospects of chip equipment manufacturers in the United States, Japan, and Europe. Faced with changes in Chinese market demand, chip equipment manufacturers in the United States, Japan, and Europe need to find new growth points to meet challenges. On the one hand, they can strengthen their layout in other emerging markets, such as Southeast Asia and India, which are gradually becoming new hotspots for semiconductor manufacturing. On the other hand, through technological innovation and product upgrades, equipment performance and competitiveness can be improved to meet the increasingly diversified needs of global customers. At the same time, these manufacturers should also strengthen cooperation and exchanges with Chinese companies to jointly promote the development of the semiconductor industry. Despite the competitive relationship, cooperation and exchanges help promote technological innovation and market expansion and achieve mutual benefit and win-win results. In the context of globalization, building an open, inclusive and cooperative semiconductor industry ecosystem is the key to promoting the sustainable and healthy development of the industry. In summary, the reduction in procurement volume of Chinese chip manufacturers indicates that the global semiconductor supply chain is undergoing profound adjustments. Chip equipment manufacturers in the United States, Japan, and Europe need to respond flexibly to this change and adjust their market strategies and business layouts to maintain competitiveness in the new competitive landscape. At the same time, strengthening international cooperation and exchanges and jointly promoting the development of the semiconductor industry is an important way to achieve sustained prosperity in the industry.